Hello guys, welcome back to another Lumley trading video. We haven't done a day trading recap or a trading kind of related video in a while. We did post earlier this week. That was kind of the return to YouTube. So again, since then, a lot of stuff has happened. Moved from the UK to Dubai. So again, kind of just getting settled out here, doing everything like that. So again, check out that video if you want to see kind of see the move to Dubai. But apart from that, we'll go through today's day trading recap. Again, we are still posting in the Discord, so even if YouTube videos aren't up every day, go and check out the Discord. Again, even like this week alone, you'll be able to see we did post multiple trades. All of them worked out pretty clean. Everything we wanted, I think it was 100% win rate this week. Everything that we looked at worked out well. But we will go through just today's trades, and that's about it, or today's trade. There was only one that we were looking at, and kind of show you how we got this trade and everything like that. So simple trade, and you'll see we're looking, well, we have a lot of stuff on the chart. What you can really do is pretty much ignore, I would say, probably most of it. So one thing, or the things we want to know is, firstly, you look over at the QQQs. I had expected a move to the upside. The reason for this is you can see we had kind of two algo levels early on both of these to the downside. When you kind of get these later in the morning, kind of like after 8 p.m. market time, they don't hold anywhere near as much value, so kind of ignore them. But we did have a nice algo candle starting up early in the day, 4 a.m., which is normally when the ETFs are normally open, or stocks kind of open, so you kind of get that weird volume move. We normally consider that an algo candle. Either way, what this told us is, again, you normally expect to at least fill kind of this middle range, and so that would normally be that move you look for on the open. You kind of hit that one to the penny, then you go up and kind of fill this algo. Now once that algo is filled, then we can start looking for some normal trades, and for this we were looking over on SPY. Now what we were looking at on SPY is, you can see we kind of have this pinkish fib. All this is, and this is such a simple level, it's just a fib from yesterday's high low. And this is something we use most days, and we'll use them as sort of magnets or just support and resistances in kind of quite an easy way. So we have these fibs out. What we will never do with these fibs is trade to them. What we do is we trade off of them. And how do we trade off of them is, that will be our support or resistance. In this case, this is our resistance. So the only way, because we open below it, the only way we will trade this level is short bias. And how kind of do we know whether you short a fib or you don't short a fib, or whether you trade a fib or not? And that's just to do with the momentum of the move. So obviously we had a strong move up on the open, we pulled back, then we went for another run. Now what's this showing you on MACD and RSI is, again, divergent into the fib. So if we want to make this strategy as simple as possible, like when we're showing it to YouTube, that is all we would look for. Divergence on the RSI, divergence on the MAC into a clean fib. And by clean fib is, I mean a fib from whether that's a weekly, a daily, or maybe you got a fib from something else. If it's the first time hitting that fib, that's obviously going to be the strongest hit of it. And if we can do that at weakness on the short bias, as we are here, then again, that is really the setup, and as clean as it is. And then that's one thing to get in. It's in how do we do this trade. So the way I always trade these is with options. The reason for that is it's just so much easier to manage your risk. And the way I'll normally trade the options is, most of the time I'll just put in a lower amount of money, but you kind of risk in all of it. And the reason I say that is, if you take a strategy like this, you go and back test it months, weeks, years, whatever, what you will tend to see is, really, if you don't have a stop on these, you'll win the majority of them, probably 95% of the time. Now, are you going to be looking for a one-to-one risk to reward if you do that? Most of the time, no. What you're normally going to be looking for if you trade something like that is, you're probably going to be looking for about a 0.5 to 1. So your losers will be bigger than your winners, but it's a win rate game. Again, some people prefer better risk to rewards. I prefer high win rates, get wins day in, day out, and just get that accuracy high. So here into here, again, short, divergence. That tells me I want to be short. Now, how do we work out targets? So to me, the way I will always calculate the two main targets is, firstly, a backtrack to this level here. Now, this is just a coded level, but all it is a 5-minute 10 SMA. Just coded onto the 1 minute, because I'm trading the 1 minute. So all we're looking at there is just a pullback to there. Now, what I will use this level for is two key things. Not only will we take our first set of profit, so say you're in with 3 options contracts, I'll normally take 1 contract here, and then that stop gets moved to break even. So no matter what, then this trade can't go red, because even if the trade runs after this, what you will see, again, 95% of the time, is you pull back from these levels and you come straight back to that 5-minute 10 SMA. So that will always be that first target, and again, where we make the trade then risk-free from there. Second target we look at is going to be the VWAP. And again, this is normally just because once you come into VWAP, most of the time you're going to get a bounce like we did here. And again, post it on Discord. So the way we posted it, the problem with this, again, when you're looking at this time, this is going to be the buy time because now I'm out here. But market time, again, you can kind of see market time down here is about 10:30, or it'd be 10:36 market time. So as you can see here, that's our short level, pointing out the divergence. TP1 pointed straight at that 10 SMA. Now, once that was hit, then the thing I'm looking at, that's hit our target. Next TP2 is going to be that VWAP. And again, exactly how did that play out? Target 1, target 2. Now, you can trade lower and hold some in if you think the move is going to go lower. To me, in a case like this, I didn't really hold any going lower, and the reason for that is there wasn't much reason for it to go lower. So again, these sorts of algos here, I consider fake ones. So to me, I'm not going to try and trade down to them. But say you had this upside algo on the QQQs, and on SPY you had one earlier in the day as well, down there, then we may look to hold that a bit further. Or if we had maybe a gap from yesterday or something that hadn't been filled to the downside, then obviously we're looking to trade that. But really, if there isn't much reason for it to be kind of dragged to the downside, just take the profits at the highest probability places and just let it do its thing. So again, if we can get 1 trade of these a day, which we get near enough every day, again, go in the Discord, you can see what we're posting. Don't know what's happening here though. But what you'll be able to see is, again, we kind of get this same sort of setup day in and day out. We'll get 1 clean setup, and that's why all I really do now is trade 1, maybe 2 trades a day on the option side of things, and just be done for the day. Because like even here, we pointed out 2 levels, and what did we say? It's going to go level to level. The reason for that is a high probability you come down and you fill this algo. And we also had a gap from the day before. Well, actually, no, this was actually a gap from the 31st of July, I believe. But either way, you're opening up near it. So chances are you're also going to fill that. So the way I would always look at that is high probability setup, that you fill them, both of these. It's hard to know which direction it's going to go first. So the way I would trade it is you wait for it to hit one, whether that goes up or down doesn't matter, and then you trade to the other one. And in this case, we went to the upside. So then I'm looking at puts all the way down to that 69.63. And you can see that's exactly what we got. Again, the highest probability setup is just into there. Whatever it does after that, let it do its things unless you've got more reasons for it to come down. In this kind of case, you do have an algo still to completely full, so you do have more reason for it to come down. But overall, that's what we'd be looking at. And just to go over, I guess, the other trades of this week is the 5th of August then. So this is actually a pre-market one. Sometimes we throw these out. Again, sometimes I'll keep these a bit more to myself. If they're pre-market trades, the time will look weird in the screenshot. So you can see here, it's showing you 11:30, whatever this is. This is because the computer I trade this on is based, or actually I haven't updated the Thinkorswim. I'll try and do that if I remember. But it's not my normal laptop that I use here. So that's actually just calculated in Dubai time. But either way, this is a pre-market trade. Again, if you go back to that day, you'll be able to check it in market time. You'll see where this setup was. Again, we have a gap to the downside. All we're looking for is this gap to fill. How do we know we want to start looking for this fill? Again, all these supports here being taken out. We're left at these final supports down here. That is kind of the bottom of the barrel. So once it's kind of taken out all those supports, there's nowhere else for it to really go apart from back up to fill that gap, because there's no reason for it to continue down, at least from how I trade. Again, getting in here, a bit of a higher risk setup because you are looking for that kind of quick reversal. So either if you take that, we have tight stops. Again, normally going to be under that VWAP extension, which is what that green line is. But again, what you can always look for is kind of a break and kind of hold of the 5-minute 10 SMA, so around here, and then you can go kind of trail your stops or kind of run your stops below that if we kind of get a crack and reversal. But in that case, same thing. That's when we pointed it out down here, or where was it where we pointed it out? So even if you get them from where we pointed it out, which was here, all it did was just run straight up filled that gap. Actually, we didn't do a new screenshot, but it did just continue up and actually filled that gap. But with these sorts of things as well, again, look at shies. So here you just missed a level. I was already out, and the reason for that is, yes, you have the gap there, but you also have your VWAP extension just below it. So chances are that's more your range to get out. And it's just the same for entry. If this was kind of our short buy, say we had a reason for it to come down here, that is going to be your range short. That VWAP extension to that gap, that's going to be your range to the downside. I mean, that kind of covers everything off this week, and mainly covers over today's trade. Again, I will trying to post a few more of these. Again, we had our comeback video out, I believe, last Sunday. We got a vlog, so like a longer version. I think we posted like a 6-minute video, the one that's already out. This one will be like a nice 33-minute vlog of where the 2 other people that work with me on Lumley trading were out here. So that will be good if you want to check that out. But again, we will start trying to post a few more of these recaps here and there. So hope you have a good weekend, and that's it. Peace.